G'day everyone, welcome to the weekend general update for the 16th of February. And look, we've had another positive week on the whole on stock markets and also on most commodities. Gold has been the only entity that's really been under selling pressure during the week, and certainly things continue to look extremely positive. So let's have a quick look at the action for last week. Just a reminder, this is general advice only in this video. So on the week, the S&P only rose 2 points, but as you'll see, it's sitting up right against resistance, and it hasn't really pulled back from that resistance. It's just paused there, which is a real sign of strength in the market. So it just continues to consolidate. And the patterns that we're seeing on a daily candle basis are really just demonstrating how strong this upward momentum is. Now the ASX 200 had yet another outstanding week, and it's just rushed up past 5,000 points, putting on somewhere between 50 and 70 points basically week after week after week. So it's been an incredibly strong run in our market. It's obviously been the strength of the banks and the rebound in BHP, Rio and other stocks like Woodside that have really fueled the gain at the index level. But we'll also see that the Small Ordinaries Index in Australia, whilst it's not done quite as well as the ASX 200, it certainly is tracking along pretty positively and has done pretty well also. Now, as usual, reporting season, which started a week or so ago, is revealing just how far behind the 8-ball analysts are on cyclical stocks, the resource stocks, media, retailers, and we saw massive jumps in stocks like JB Hi-Fi, Bradken, Leighton's, Worley, all stocks that were being fairly heavily marked down and fairly heavily short sold as well. So analysts, as normal, way behind, and there's going to be a real scramble now to upgrade the estimates. So we saw materials and energy outperforming over the last couple of weeks, and I would expect that that will probably continue as we progress over the next couple of months. Now, US bond yields, which is I've been talking about now for quite some time, money coming out of bonds. There's a lot of discussion about it in the media, so pretty much everybody knows about it. There's a rotation. It's a long-term rotation from money being parked in the relative perceived safety of bonds is now rotating out and going into stocks. There's the perception of safety, but frankly I see nothing safe about guaranteeing a real negative return once you take into consideration inflation. But nevertheless, that's what a lot of people were doing. They were more concerned about their capital rather than the return on their capital. That's changing now, and there's a lot of money still yet to come out of the bond market and go into equities. So US bond yields still continuing to track a little higher. Now the US dollar edged higher on the week as well, but it's really more a matter of euro weakness than strength in the dollar. So as a result, the Australian dollar hasn't really moved all that much in response. But the US dollar ticking up a little bit is certainly part of the reason that the gold and silver have been under pressure. Now gold had a bad week, slumped $56, and this may be the explanation. Chinese buyers with the Chinese New Year have been out of the market for 2 weeks. That could of course have an impact. And it was also options expiry week, which does cloud the action a little bit. So we did break some key support, which is not what I wanted to see. So hopefully we'll see a bit of a turnaround in the very near future. February typically is a bit of a weaker month for gold, so once we get towards the end of February over the next couple of weeks, hopefully we'll see that turn up. International gold stock indices also broke support, which is not what I wanted to see at all, so this is really disappointing price action. It doesn't change the longer term. I'm absolutely unchanged in my view that the fundamentals for higher gold and of course higher stock prices to go with that is unchanged. I see this as a level of irrationality in the market, and when you look at some of the valuations of some of the better Australian gold stocks, they certainly are starting to look like we saw some of the mining services companies a month or so ago, where the market just were completely slaughtering the prices. They were down to irrational levels, and it really took a confirmation from the mining services companies that things were improving, and prices have rebounded very, very strongly. In some cases, they've nearly doubled in a very, very short space of time. I think it's quite possible that we may see something similar with gold stocks, because with the good gold producers, they're just down at stupid levels now. Copper held steady at 372, and oil also held steady at 96. And there's the price chart for copper. So really, it's been in uptrend, as you can see, from about the middle of November last year, and is just consolidating a little bit over the last couple of weeks. So let's jump in and have a look at some prices. And we'll start with the S&P 500 index. Just pan back, you can see key resistance level here at around 1520, 1525, and then of course 1570, the all-time highs. We've got quite a strong trend going, as you can see. The index is extended a fair way above that trend line, so hopefully we won't see a pullback to that trend line in the near term, because that's quite a distance. But what's encouraging about the short term here is that, having got to resistance, the share prices have not come down. You'll notice the last three candles, there's been an initial sell-off in the market, but it manages to recover every time and close somewhere not too far off the highs. So that's all pretty encouraging action on the S&P. So I really think the odds favour a continued move to the upside, and probably a move back towards the all-time highs. Now, just looking at the smaller Russell 2000 index, just to get a bit of an idea of the health of the market at the small end. You can see on the Russell 2000, you go back all the way back to the early 2000s, we're at all-time highs, and it's continuing to track higher at a very sharp rate. You can see the angle of this moving average. So the Russell 2000 still moving ahead very, very strongly indeed. So that's a good sign for the health of the market. This is the Aussie market. You can see the resistance line there at just under 5,000 points. And we just raced through that. It's gone up almost in a straight line since the turnaround on the 16th of November. It's way overbought, but it just continues to power on. And it's really got very little to do with stock valuations at the moment. It's very much about relative yields. And the market could continue higher, but I would really recommend extreme caution until we get some kind of mild correction, just to get a bit of the excess heat out of this market. Now, looking at our small ordinaries index, we've not done as strongly as the ASX 200, but nevertheless there's a pretty strong uptrend happening there, and it can still continue to track higher yet. You can see that's a pretty strong angle of ascent. Now, just looking at the sector comparisons, healthcare on the top, getting a bit of a pullback. Telecoms and banks, and certainly telecoms levelling out a little bit. Telstra's probably pretty fully valued. The bank's still rising, and we've certainly seen energy and materials also continuing to trend upwards as well. So a lot of strength there. Let's just have a look at a couple of important Asian markets. This is the Shanghai Composite Index, and we're almost up to key resistance now. So this is very important resistance around this level. So it'll be interesting to see what the Shanghai Index does around here, but you can see that is also a very strong trend on Shanghai. Now let's have a look at the Nikkei Index in Japan, and you can see we had a resistance line that was broken here about 10 days ago. In fact, this is a weekly chart, I beg your pardon. So going back to late December, we saw the Nikkei break out of a long-term consolidation and has continued to head higher. Now let's have a look at some key potential levels. We'll pan back in time. And we can pick up some key levels through here. So you can see we've got some important levels. Where there's been very clear reversals. We had one here. We've had a couple through there. We've had another couple there. Another one here. So this has been a very, very important level on many, many occasions. I'll just complete this so you get a sense of how many times this area has been important resistance. So there's about 6 or 7 occasions where this level has proven to be quite important. We're coming up to that now. We've broken through the consolidation and the downtrend. A close above this level here at around 12,000 points on the Nikkei would certainly confirm a significant uptrend. They're all just good indicators for the Australian market. If we've got the Asian stock markets moving ahead very strongly, then it's it's going to be a good thing for our resource side of the market as well. Now I mentioned the US bonds ticking up. This is the US bond yield. It's obviously way down. It's really still in a big picture consolidation period, so we can put some important support and resistance lines through there. So clearly it's still in a basing consolidation phase, but also clearly there's an uptrend to what's going on as well. Now it'll be important to see it's up. The yield on 10-year US bonds now is back up to about 3.2%. Around 3.4, 3.5% will be important to see what the action does around about those levels, because that will have an impact on stock markets. Now gold. Let's have a look at gold first of all on a weekly chart, big picture view. We had a triangle formation here. I felt that the next move would be to the upside. It wasn't. It's broken to the downside. The next support level is down here around 1550. Let's just have a look at that support level down there. So we've got 1, 2, 3, 4, and then many touch points here. So we've got about a dozen touch points at this 1550, 1560 levels. That's pretty important. Whether gold has a sharp rush down to there and then reverses, or whether this turns out to be a false break, we'll have to wait and see. But it's certainly not what I was expecting. Let's look at it on a daily chart. You can see we had a clean break on Friday of a pretty important support level, and yeah, not a particularly great sign. And just looking at the gold stock indices, this is the GDX. Now we've got key support down here. So we're basically sitting right on that support level now. So hopefully we'll see a reversal pretty soon. It's oversold, but it's just really failed to bounce. It's been really a pretty sad story. And the other way of looking at gold stocks is on the QE index. So you can see we had 2 support levels here. We've sliced straight through the first one. Hopefully we'll pick up the second one, and again it's oversold as well. So look, other than gold and gold stocks, everything else is just going ahead beautifully, and we just need, ultimately we'll see a reversal in these stocks, but we don't quite know now when that will be and where it will be from, so we'll just have to wait and see on that. So that's it for the general update for this weekend. Cheers.